Today we're going to discuss life insurance and how to get the most coverage for the best price. My name is Cade Bekanich, certified financial planner and owner of ParkLane Financial Group, and I have seen way too many clients be taken advantage of when it comes to life insurance policies. Let me say that I am licensed in life insurance, and of course this is not advice directed to you. I've had plenty of clients come to me over the past few years owning life insurance policies that were completely inappropriate for their situation. Here's an example. If somebody sells you a whole life insurance policy, I'm not saying that whole life insurance policies are bad, but it's likely that you're paying a very high premium, if not possibly the maximum premium for that certain level of coverage. Oftentimes, whole life insurance policies are sold as a retirement asset, but what a lot of life insurance agents don't tell you is that when you choose to dip into that cash value reserve during retirement, it actually depletes the death benefit that's offered to your beneficiaries. So if you have a $1 million policy, you're in retirement, and let's say there's a $900,000 cash value to your whole life insurance plan, it might be a great way to access money, especially at a low cost and on a tax-free basis to fund your retirement if you need it. But I want you to recognize that if you take $100,000 out of that policy, even though the cash value has been built up and it's offering you the same amount of death benefit as day one, it does reduce your death benefit. Let's use this as an example. If you have a $1 million whole life insurance policy with a cash value of $500,000, if you borrow $100,000 from the cash value of that policy, it doesn't mean that your beneficiary receives the cash value and the death benefit associated with the policy. It's actually all bundled into one. So let's go back to that situation. If you take $100,000 of cash value out of a $500,000 cash value pot on a $1 million policy, and you pass away during the time of that loan, your beneficiaries would actually receive $900,000 instead of $1 million because you borrowed $100,000 against yourself. In other words, you don't actually get the cash value and the death benefit of the policy. And even though you have a cash value build up in that policy over time, you're really only getting your own money back plus a small rate of return, which kind of might hint that I'm not totally partial to whole life insurance. I do think that they're appropriate. I think they're a great solution in an appropriate case. But what I don't like is that plenty of advisors have a bad name for selling them simply because the commissions are very high. When you buy life insurance, it's just that, insurance. It's not an investment. It's not a retirement vehicle. It's a way to protect your beneficiaries in the event of a premature death, especially during your earning years. Which brings us to my personal favorite type of life insurance, term life insurance. It is the best way to get an incredible amount of coverage at a very low cost. Term life insurance, which is temporary life insurance, meaning that it's not a permanent policy, there's no cash value buildup, and there are no investment selections associated with that policy, is a way to simply be insured for a period of time while only paying for the insurance. You're not paying for any fancy tools or tricks within the policy, such as different riders, cash value buildup, or anything else that you've been sold. You're simply paying a monthly, quarterly, semi-annually, or even annually premium in order to cover your beneficiaries in the event of your death. Now, despite being a temporary policy, if you're looking for maximum coverage for the lowest possible cost, term is a no-brainer. I often encourage term insurance for new parents, new homeowners, people that are really just starting in life and haven't had the opportunity to build up a true cash reserve or investment reserve that would supplement their spouse's lifestyle in the event of a premature death. Again, plenty of different options, plenty of different methods to my madness as far as how and why we use certain solutions, but I do like term insurance for getting the most possible coverage for the lowest premium. Next, we get into the universal life policies. You have indexed universal life, variable universal life, and a few variations of these other permanent policies. But the key word here is permanent. Universal life policies are known for being the most flexible option when it comes to life insurance. If premiums aren't paid on time, there aren't any penalties associated with it. If you have a cash value buildup, you're actually able to use that cash value to pay your premiums in the future. Insurance coverage is typically cheaper than that of a whole life policy, and there is an opportunity to increase your death benefit through investment performance while maintaining a guaranteed minimum death benefit. So an IUL, or an indexed universal life policy, is something that I might use with my clients who have truly high net worths, because this is a great way to provide a tax-free death benefit to their beneficiaries without totally minimizing investment exposure. In other words, you still have market access, you still have the ability to participate in upside movement while having a downside protection, and most importantly, your beneficiaries receive the proceeds just as any other life insurance policy, completely tax-free. Don't forget, when you buy an insurance policy similar to car insurance or home insurance, you're buying a level of protection. You're buying security. So please, don't let somebody sell you a life insurance policy as an investment, because it's not. Some policies do categorize as investment types, but the truth is that the only reason you should purchase life insurance is to provide a death benefit for your beneficiaries and to maximize your estate. Otherwise, If you're buying life insurance or being sold life insurance simply for the cash value to fund your retirement, even though you might have plenty of money otherwise, just be careful. So whether or not you own life insurance now, are considering life insurance, or even sell life insurance yourself, take these things into consideration when determining which policy is best for you or for your clients. There are plenty of other videos on our channel from estate planning, tax planning, investment advisory, and so much more, so don't forget to check those videos out. I'm Cade Bekanich. Thanks for watching, and we'll see you in the next one.